I donated to both parties. I donated about the same amount to both parties this year. That was not generally known because despite Citizens United being literally the highest profile Supreme Court case of the decade and the thing everyone talks about when they talk about campaign finance, for some reason, in practice, no one can possibly fathom the idea that someone in practice actually gave dark. So, I don't know, all my Republican donations were dark. You won't see them. And the reason was not for regulatory reasons. It's because reporters freak the fuck out if you donate to a Republican. They're all super liberal and didn't want to have that fight. So I just made all the Republican ones dark. But I was, whatever, second or third biggest Republican donor this year as well. But also, it's all for the primaries. They didn't give anything in general elections. They don't give a shit about general elections. It's not what matters. Like, it's the primaries where you have good candidates against bad candidates.
I mean, the obviously striking thing about this clip is just the sheer literalness of SBF and him almost just saying out loud what he's done. And that's been consistent throughout the last few weeks where he basically, like, oh my God, he just say it. Like, it's like, or he admit it. Like, it's like, it's just that continuously happening over and over again. This one, I think you do see a bit of a difference in his demeanor. This one he didn't expect to go public, and in recent appearances he's been like a bit more like contrite, but also sort of like playing dumb. Certainly here you can kind of hear him sort of like talking about trying to work the system, although this is not some sort of grand, again, like brilliant conspiracy. He's doing kind of like logical establishment things, cozying up in kind of the ways in which someone who is trying to kind of buy their way into influence would do. It's all very sort of surface level. Like, it's kind of like this post, I don't know which modernism experience watching this all unfold.
Yeah. I mean, I think so, like the actual, so this interview, I think he knew it was recorded, but it was with this like crypto YouTuber. So she's not really usually a journalist, but for some reason, like, I think if you go to like the end of this entire thing, she asked him like, why did you choose me? And he was just like, I don't know, intuition, I guess, something like that. Yeah, it's so weird. I mean, that, yeah, like you said, it is so, I think he is genuinely being himself, but that doesn't itself, of course, like forgive him of the amount of shit that he's done already. I think it just completely, for a lot of people, destroys this kind of simulation or mirage that people have about people who are extremely rich and extremely powerful. And the fact that he is just saying everything outright that rich and powerful people do in order to gain influence. And, it's like, if you are aware of all these things, it's like, okay, of course he's going to do all those things, but it's also that I think it's just the strangeness of his confessions, I guess, or the literalness of his confessions is like he's a literal villain in some ways.
Well, I mean, I think it also like sort of debunks the kind of like politicized new narrative of this whole ordeal. Like, like he talks about giving to Republicans there, obviously, and one of his business partners also. Yeah, and
like the co-CEO, what's his name, like Ryan Salami or something like that.
Yeah. He definitely also was like a big Republican donor. So, but I think like this clip is even more kind of illustrative because it's like this is sort of not a partisan thing. He's just sort of playing the current game, the current meta for the establishment. Like right now, the Democrats are in charge. The Democratic kind of like, version and side of the blob of the establishment consensus is kind of the one in the driver's seat. And so, like what I hear there is just like a sort of like a bit sociopathic, kind of just like cold, but also like weirdly like earnest in a weird, like a strange way, conspiring out in the open.
Right.
Earnestly
sociopathic.
Yeah. it's just very emblematic of where we are as a society right now. That it feels like all the new crises are like all more ridiculous than the last one.
Literal sociopathy. But yeah, I think it's to me it's what is what was really distressing about the first, the beginning of all this was the kind of like how conspiratorial everything got very quickly. Like the amount of, different crypto accounts, especially these degen trading ones, were like, oh my gosh, it's this, communist cabal of Democrats who are like, and like sort of flirting with anti-Semitism of just like, that this was all sort of planned. This was all a psyop that, that the Democrats were kind of planning. And then, SBF goes and kind of like breaks this by being super literal about, yeah, I gave to Republicans, in dark. I just didn't, because liberal journalists like get mad at me. So like he also uses kind of like the language of the sort of like radical centrists whenever they want to punch at the left. And it's also like if you dig into any of the donations that I actually made to the Democrats, they were all like these, centrist candidates and who were running against progressives. So it's always funny to see like these degen accounts and like how quick they are to flirt with fascism. And like, of course, then, what was it, like a month or two ago, whenever they were like in love with Meloni in Italy.
Yeah, I mean, I think one of the things that I really admire about what you're doing is trying to kind of bring a different group of people into at least considering, blockchain and related technologies from more the left side, because certainly the existing people skew, right libertarian, and in a lot of ways, they've been able to kind of come up with incredibly powerful concepts and primitives that I think you and I both see a big potential in, maybe beyond like what their initial creators' intent was. But certainly their ideological priors make it very difficult for them to perceive reality more than partially clearly at any given time. And this is not, to me, like I think it's, and also the fact that he hasn't been arrested yet is another thing that's like been talked about a lot. And like, like when Bernie Madoff was immediately arrested, like it definitely stands to reason that like the influence that he had may have blunted or slowed the SEC building a case, or some other regulatory agency building a case. And there does seem to be some reporting and evidence of that. But again, it's sort of a bipartisan story on that front, if anything. But from this point forward, I mean, we're going to see him, I'm very certain, in on the docket soon enough. I don't really feel like what we're going to watch is sort of like a grand conspiracy, like spy movie style. I think what we're going to see is just sort of the most sort of literal car crash of a disaster for the industry trying to kind of make itself more serious in the eyes of the public. And I think this is just, this is sort of what it's going to amount to.
Right. So I think for this discussion, what I would really like to do is talk about, first, maybe give people, the listeners, a kind of summary of things that happened, give our analysis of a type of, I guess I would say, more realistic or a better understanding of kind of what the events are happening and what's causing it, because I think a lot of it has been not so great as far as the more conspiratorial kind of analyses that have been floating around on Twitter and such. And then I want to talk about the recent published article that you did on in your Mirror, where you talk about some of the ways forward based on kind of, well, just like having a grounded understanding of the reality that crypto is in right now, both the good and the bad. But before we do that, maybe Ben, do you want to give people just a very quick introduction to who you are and the type of stuff that you've been working on in the crypto world?
Yeah, I'm a product manager. Was kind of in the general Web 2 tech industry prior to about a year and a half ago, where I worked at an Ethereum wallet, and that was kind of my intro into crypto and Web 3. So I bring kind of a left political prior to everything that I do, and kind of my values. And I've been an observer and a sort of political Twitter addict, just like everybody else, for all these years. And from my perspective, blockchain has obviously this sort of right-wing slant to its origins. It has a lot of its most vocal supporters and the faces of the industry from the political right. But I actually do see various pieces of the sort of decentralized computing, decentralized blockchain and ledger technology, public blockchains, and a lot of the ideas and technologies that come out of the space as having potential liberatory properties, can be used by the left, can potentially change the material conditions in some marginal ways of kind of the economy. And I think it's moving real value around is a material thing. And as someone who is kind of a materialist first in my analysis of what's going on, it's kind of hard to ignore the potential material impact of some of these technologies should they actually reach adoption. And so yeah, I'm working more on the kind of product and business side of the industry, and kind of networking and talking to some of my fellow left-leaning people in the space and trying to kind of put heads together and see what this thing could actually become.
Yeah, so I think it's thanks for the introduction. I think what I think is like interesting about your particular position is that you're kind of, from what I understand, I mean, I remember, I think I was following you on Twitter, and before you really entered into the crypto space, I'm curious to know, like, what was it that sort of convinced you, or like, yeah, that made you want to take the jump? Yeah. Because indeed, if you come from a type of left-wing tradition, because I know that you have you had a lot of connections with, I think especially like the Michael Brooks show. That's pretty rare. Like, I think you're like one of the very few people that I know that made that kind of jump.
Yeah, I mean, it was always kind of something that I kept an eye on, and I think it's, in some ways, I have to back up a bit also because it touches just like my like view on the general tech industry. So, as like my craft and my like day job, like my skill set lies in the tech industry, and it's always been a kind of right-leaning space. Is contrary to kind of, I think we're finally seeing that in broad daylight now, but it's kind of always been that way. And so this is the thing that I do for a living, and so I'm always kind of like, obviously you can call it kind of like cognitive dissonance or whatever, self-justification, but like I'm trying to see like where are the other angles and what are the things to consider about these things that are objectively kind of moving the material world around. Like I said, like I think it was Leo Panis that talked about more from like the finance aspect, some of the issues with the left not having certain technical expertise. Like let's say we nationalize the banks. Like, what are we going to do tomorrow with like a nationalized investment bank and building capacities for operating parts of the economy? So that's my self-justification for my day job and participating in various capitalist tech companies and working in the kind of for-profit crypto sector and so that's kind of my general view on like technology on the left and at a very superficial level. But on the crypto side, it never really particularly sparked my interest up until like a year and a half ago, when a friend of mine who is a NFT collector kind of told me to download an Ethereum wallet, sent me some ETH and an NFT, and I sort of had like a very fun weekend going down the rabbit hole in like various NFT communities and trying out OpenSea to buy NFTs, and it was a really just like fun and just fascinating experience. And then a few days later, I ended up kind of getting contacted by the Ethereum wallet, sort of coincidentally, in a recruiting call, and so I kind of felt the industry, which like had really piqued my interest for on a superficial level, was kind of tapping me on the shoulder to pay more attention to it, and so yeah, I really went sort of down the general rabbit hole. Insert GIF of the Neo Matrix scene here, where he's doing the kind of training. Yeah. And I think it was probably Uniswap itself that really broke my brain when I first grokked it. I think, Uniswap, for those who don't know, it's like a decentralized exchange and implemented first on Ethereum. And it is essentially a vending machine that kind of lives autonomously in a cloud that no one controls and rolls on, essentially moving, billions of dollars of trading volume, essentially autonomously. There is this sort of Uniswap governance, of course, where and there's lots of kind of complications with U.S. securities law and how that governance is able to kind of operate and interact with the sort of decentralized contracts. But like at the end of the day, was as soon as I grokked the fact that, hey, this thing is like a piece of code that like does something for people. Right now it's like primarily a speculative use case, but this is a general technology, and the same concept could be applied to various other things. But this thing was just like running on its own. In some ways, the code itself is an ownerless machine, uh, and that really sort of like that was kind of the moment where I was like, okay, like DAOs, decentralized compute, decentralized applications, technology for collectives and regenerative agriculture, recombining. I sort of saw the non-speculative side, and that's what really sucked me in, I think.
That's interesting because I think when most people on the left, I find like if I try to, like if I bring up something like Uniswap or these other examples, like yes, they're all kind of finance related. So generally, the immediate reaction is like, why should I care about that? It's money related, it's finance related, and we're against that, so we shouldn't care about it. But I think what I'm guessing it's maybe because of your already having that experience in tech, kind of the implication, not necessarily of the surface level use case, but sort of the underlying infrastructure or the implications of that infrastructure. It just so happened that it is using that infrastructure for this speculative use case. But the thing that is probably much more interesting is the fact that it will keep existing no matter, I mean, as long as the blockchain keeps existing, which is like a fairly powerful idea if you try to think about that in the context of, for example, left-wing organizing or other things that the left is generally more interested in.
Yeah, or actual pieces of the economy. I'm very fascinated with the Mondragon Corporation, of course, and collectives and cooperative businesses, and kind of the intersection between those and labor organizing, and the idea of like parts of the economy which potentially are more vulnerable to self reorganization by parts of labor, and potentially with like certain aspects that are like digital or like low capital required to kind of start them up, like services marketplaces, for example. Like I'd love to see a real like these driver cooperatives for um, competing with Uber. I think that right now we haven't really seen blockchain being used to kind of enable, incentivize, expand, or scale, or coordinate something like that. I think that as probably over the next few years, as like the like tokens and the financial and some of the also like the limitations from a technical standpoint sort of melt away as the so-called scaling debate in blockchains becomes much less relevant. I think that once we have these kind of somewhat invisible thing, tokens, NFTs, smart contracts to organize, and kind of like multi-sig wallets to organize the control of resources and the voting around the control of those resources. Like I think that we very well may see interesting applications when it comes to like the real economy and real, again, we're not talking about all of production becoming decentralized and sovereign, whatever that means in terms of, there are real like material constraints and capital constraints to doing certain things. But services is interesting, and various forms of obviously expression and mutual support, mutual aid, and coordination, I think is definitely possible. Whether that's inevitably going to happen, whether the left will sort of kind of give the benefit of the doubt enough to kind of tinker and play with some of these ideas and participate and see the possibility, whether the industry itself self-immolates again, after what's recently happened. But I certainly think the potential is there.
Yeah, I think what is kind of a frustrating maybe idea for me to kind of convey is that a lot of the, at least my feeling, and I think you have the same as well, is that a lot of the kind of technical limitations that may exist right now, I feel that a lot of them are going to be probably fixed or probably like improved upon like pretty significantly in the coming years. Like I think that there's like a decent likelihood of that. But that's not really where like the hard thing is. The hard thing is just like, yeah, getting people on the left to not react so harshly whenever you bring up the like small possibility that maybe some of this stuff is helpful.
Yeah, and I think it's also, I would also say like there's a degree to which this, I think, to some extent might be an opportunity for capital to hoist itself by its own petard and kind of, I think that the internet's impact overall on society was probably reactionary. Like if we summed it all up at the end of the day, right now the scoreboard kind of points reactionary, and so I'm very sympathetic to the idea that hey, like what's to say that the next internet wouldn't also follow the same path? But it's also kind of without a doubt that the internet has also made society and the current situation much more liquid and hard to predict by the ruling class, by the which is itself decentralized and like coordination over kind of like older mechanisms of networks of patronage and networks of kind of mutual interests were definitely disrupted and kind of again the word is like in my mind is like liquefied a bit by the internet. And I think crypto has a very strong possibility of having kind of similar effects where the unpredictability of, if we go back to ideology, kind of something that is sort of like, hey, like things should be open, things should be democratized. Almost by like drinking the full Kool-Aid of that, there's, I think, some extent to which they're letting genies out of bottles that they don't necessarily, like the full impact, I think, of certain things being able to be organized. For example, I just think like a fully decentralized application for, let's say, social networking that is like completely uncensorable and cannot be taken down. Like that has a lot of like other implications around harassment and misinformation, and there's a whole kind of debate around like how moderation works in a world like that. But the kind of fact of if these open networks are sort of put forward maybe by right-leaning forces in order to kind of allow for the kind of open exchange of information, of bits of computing, and those financial applications are kind of the basis on those cases that keep these spaces open. For example, in code as speech, which I think is like most likely probably like a good thing for the left, and like the left should like embrace that as having like implications and complications, but like fundamentally we really do not want to get into shutting down what kind of websites people can run and how they can organize. And yeah, I just sort of think that it's hard to predict the full impact of technologies like this. And it's not just blockchain, by the way. There's like decentralized compute. There are projects going on that have like nothing or little to do with blockchain. There's decentralized storage and from the IPFS network. So I think that there is like a degree to which certain unpredictable, potentially liberatory and kind of definitely destabilizing, and that can be good and bad.
Yeah.
Effects may result from something like this.
Yeah, I think the way that I see it is kind of like, I mean, Schumpeter has this idea of creative destruction, which he basically took, that he created like after reading Marx. But how capital sort of reinvents itself over and over again, that sort of new forms of capital take over the old forms of capital. But I think in that process, there are always like, it creates like these cracks that we're seeing, I think, more and more. Like it's what is creating this unpredictability, because sort of this intra-bourgeois sort of battlefield is sort of happening. I think there are these cracks that are sort of being made. And I think, if the left doesn't also adapt to these type of this creative destruction sort of happening and doesn't sort of push or insert itself into these cracks, then you're just creating a sort of self-fulfilling prophecy that's, oh, well, the internet is right-wing, therefore it's, all these new things are also right-wing, and then it'll become right-wing because only the right is sort of in it and has any power over anything. And so like by saying that, all these things are right-wing and it will continue to be right-wing, then of course that will be the case because you're doing fucking nothing about it.
I think one thing that draws people into crypto and Web3, and something which is maybe shouldn't be underrated by the left, is there's a degree to which like there's not a lot of agency and action in like a lot of our lives in a lot of ways at kind of the point in capitalism, the point in society that we're at. And crypto both in terms of kind of the the token economies and NFT and things you can do, as well as obviously things that people are building, and a lot of where I think of like many like not just nonprofit but like fully mission driven kind of like altruistic organizations that are like building and maintaining in like very democratic and egalitarian ways like core pieces of like, for example, the Ethereum infrastructure and base layer. But I think like one of the things that crypto and Web3 sort of in what way it feels different than kind of everything else going on is there's kind of like vectors and degrees to which people are able to act. There's like action involved here. Like people can organize a small, like a kind of like a neighborhood, like unemployment insurance fund or whatever. Now, is that like totally dystopian in this in the in the phase of like retreat that the left is in? That like these kind of self organized things are maybe the only thing that is going on that front. But I think that this ability and this like place for people to act in limited and constrained ways, but deploying a contract is an act. Like sort of forming a sort of shared wallet between whatever, like like the things that you're doing at Bread Chain, for example. Like these are experiments that can potentially touch the real world, and I just think there's something to be said about both like how that draws just generally people into the space, not just from like a left or a political perspective, but like this is an arena in which we can take action on certain things, and sometimes that action is like getting rugged and like whatever. But and there's a lot of consumer protection problems therein. But nevertheless, I think do I think this is like replacement for political organizing, union organizing, and all other types of political struggle? Absolutely not. I think it's probably a relatively small part, even in the most optimistic scenario for what this tech could be. But it certainly is a substrate where people can take action in a plane that really should be contested. Because if it's not, like to your point, it's really just the right wing's a tool.
Yeah, well said. I completely agree. So I think one of the like you've talked, like you mentioned before, these type of consumer protection problems, and we were talking about
speaking of that,
FTX. So maybe what I would like to do, because indeed I think maybe we'll talk about this afterwards, but like I think what is something to sort of convey, I think, is sort of like the difference between sort of centralized entities that may use decentralized infrastructure and how that differs from a centralized entity building on top of centralized infrastructure. I think in the case of FTX, maybe I can just like very quickly, for people who may have no idea what's going on, because the entire story is incredibly complex and it's incredibly stupid in many ways, and just like makes you feel like you're living in clown world. So I can like just very quickly go through some of the most important things that happened, and feel free to jump in if you want to add anything, or if I get anything wrong or whatever. But so FTX is, or it was, the I think second largest exchange in the world by market cap, and fairly recently it's
third, I believe,
or third. They went bankrupt. After like this kind of like very strange series of events happening. And for a long time before that, even FTX was sort of not very well liked by the greater crypto community, because people saw the founder, whose name Sam Bankman-Fried, or SBF, they saw him as kind of being like this guy that was trying to, well, he had himself a lot of influence compared to other sort of crypto people, because he was given like these different, he was able to speak in front of like the Senate or the Congress in the US. He was able to propose he was in the middle of proposing different regulations to the US government. And so a lot of people, especially the libertarians, really didn't like what he was doing, because they thought that the regulations that he was proposing were very bad, and they were being proposed in ways that would sort of benefit his company, FTX. But FTX, what was really interesting as well, FTX was an exchange online, where it was a centralized exchange. So you could give them money, and then you could sort of trade and sell cryptocurrencies. And they also had you can margin trade and do all these things. But they also had a sort of a VC firm arm, or like investment arm, called Alameda Research.
It was a hedge fund and a proprietary trading arm, as well as kind of like allegedly beforehand what was called a delta neutral market maker. So they were really just sort of almost sitting on both sides of trades. And I think one of the big shifts over the last year and a half was like that reputation becoming, they're just becoming a trading shop. So yeah, it was an exchange essentially that was funded, as I understand correctly, from the initial trading profits of Alameda Research. So it sort of sprang from Alameda Research, and in fact, at the beginning of the life of FTX, like early clients would wire money directly to Alameda to get a credit on FTX and begin trading because I think it was they couldn't get bank accounts yet. There's a lot of sort of regulatory like jurisdictional things with FTX as well. Like they had their main subsidiary or their main holding company was based in the Bahamas, and it had subsidiaries around the world, including FTX US, which was like much more regulated than the global version. The global version was the one that ultimately was like the kind of vector for the contagion, because the some of the regulations in the US and the scrutiny kind of kept that from becoming an issue there. But of course, the vast corporate spiderweb structure anchored by FTX and Alameda, everything kind of went down as the last few weeks unfolded.
Yeah. So I think what is interesting, or kind of, well, in a bad way, is that Alameda, like I think in most cases, like in the traditional finance, this would be completely illegal for the same company to have both an exchange and, a hedge fund, basically, also to be able to trade on their exchange. And the reason being basically because of what resulted happening afterwards.
Yeah.
But so if I just go quickly through some of these main points, on November 2nd, Alameda Research, they had their balance sheet sort of, I think someone like had leaked their balance sheet. I believe it was CoinDesk. And it showed that most of their assets were in FTT, which was their own token, and they were backing a lot of the loans that they would be taking out, and they would basically use FTT as collateral. So there's like a huge conflict of interest where Alameda, who is under the same company umbrella as FTX, owns so much of the FTX token, and so that sort of like caused a little bit of a stir, because I think people were kind of concerned with how that balance sheet looked. Caroline Ellison was the Alameda CEO at the time, who also happened to be I think a previous or current girlfriend of SBF, who was in like this polycule in his Bahamas penthouse of like 10 people. A lot of strange stuff there. Well, she mentioned that on Twitter, I believe it was on Twitter, saying that 10 billion of assets were not being reflected in this balance sheet, as a way to sort of calm down, what people were speculating on. At the same time, you have the CEO of Binance, which I believe is the biggest exchange. His name is CZ. He announces on Twitter that he wants to liquidate all of the remaining FTT that he had received because they had invested in FTX previously. There was also a lot of like bad blood between CZ, the CEO of Binance, and SBF, the CEO of FTX, due to other like drama that we don't really need to get into. So there was a lot of like tensions between that. Caroline Ellison responds that she would love to buy all of the FTT that they want to sell at $22 OTC, so over the counter. What that sort of signaled, I think, to a lot of people is that $22 is probably like a very particular price in which Alameda probably needs the price of FTT to stay above.
Yeah, otherwise they get other. So like basically what happened is it's what appeared to happen is they were going to be liquidated under. I think 22 was the original level. It actually sort of broke down at a lower level. That was sort of like a very strange like 72-hour period where it was like one giant day. So it's kind of hard for me to remember exactly how it went down. But yeah, the Alameda was basically taking a loan out against the FTT tokens that it held, which were the FTT tokens was really just like a token for a discount on the FTX exchange. It had like a $9 billion market cap right before all this went down. So this was like the primary asset on Alameda's balance sheet, which was leaked. And the fact that this being the primary asset spooked everyone because everyone knows that there's some extremely fundamental relationship between Alameda and FTX that is not kind of like fully out in the open. And that was kind of the beginning of like the crisis of confidence, where if this asset fell below, and CZ's tweet kind of initiated this run on the FTT token, and that basically forced the value of the collateral for the kind of loans that were keeping Alameda afloat from what looks to be kind of like a potentially 6+ or month hole, potentially starting around the collapse of Terra. It looks like in a cascade of financial contagion that is only really rearing its head now.
Right. Yeah. So part of this entire thing as well in the background, this story is so complicated sometimes, but like you also have, of course, the collapse of Terra Luna, which I think Alameda was pretty heavily invested in as well. So like, it was, I think, strange at first that they were able to stay alive after the crash of Terra Luna, and then that they also bailed out a few other crypto companies like BlockFi, which has now declared bankruptcy. So I think it was a bit strange. There's like, how do they have so much money? I think people were kind of like also like wondering about the math behind that because it was such a huge crash. And so like it just took like a month or so more for all this contagion to start spreading.
Yeah, I mean, I think the thing that to be aware of around the way that it blew up was, so the mechanism. I think one of the key facts of like obviously the criminal or whatever investigations going forward is going to be like, what was the intent and what happened? And I think like, SBF continues to evade and say in interviews that he's like, he didn't touch customer funds. But what I think is important, like what I sort of gather of the past,
he just fucking squirms every time he's asked that. It's like,
yeah, and I think no, I mean, and I think I sort of get now what the mechanism was, which was basically Alameda was a trader on FTX's exchange as well. Like they had a lot of positions and made markets on FTX, etc. They lost huge. And normally what would happen if you were a trader that got wrecked that hard is, and you were on leverage, is you'd be liquidated. But essentially what seems to have happened, because if you didn't, the exchange would essentially be taking on like an unlimited, like your losses become the exchange's losses because they're essentially like, backstopping this like fictional line of credit to you that in this case, it looks like they like hard coded an override for, or an exception for Alameda, which basically meant that Alameda was just like trading on funny money, getting deeper and deeper into the hole. And then when the kind of run on the bank, if you will, quote unquote, happened, the money basically that would have gone back to those, the outflows to those customers was essentially like it needed to be that amount plus Alameda's losses, which is essentially what forced the thing into bankruptcy. So that mechanism is a bit arcane. I might have gotten like some details wrong, but that's the sort of way in which I think, yes, did he like touch customer funds, directly, maybe and probably, but like the way that it sort of happened was this sort of linked together exchange and prop trading desk, which they basically just like tried to sort of use like a God mode cheat on and then like make it all back. And it ended up essentially being the backdoor where all the kind of customer funds like flew out.
You're right. What is so funny is that they were basically playing God mode and they fucked it up.
Yeah,
like
no, it's
they,
incredible.
they were in such a position that they did not have to do a lot of the things that they did or take such risky positions that they needed to take. And they still, like they would have made money forever.
That's probably important to talk about for the people who don't kind of know the inside baseball is the reputation of FTX. So there's one side of it, which was the sort of like, the kind of the willing regulated entity or, that whole virtue signaling thing that he sort of talked about on the leaked call. There's also, though, in the crypto community, particularly on the Alameda side, but even, from Sam's perspective, of him being sort of this like absolutely ruthless operator and Alameda being like the most profitable shop in crypto. And the fact that, there's like there's like these tokens that they invested in and then kind of like dumped at the absolute right time. And There's ways in which this liquidation engine that I talked about in other cases was used to kind of buy Alameda allegedly to make outsized profits in ways that maybe aren't even necessarily illegal. But I think they have this part of the confidence game and part of the way in which this dragged on, kind of rigor mortis almost of 6 months after the initial kind of financial wound was Sam's reputation as kind of like this sort of magnanimous type of guy, but
The big good
also
boy.
the kind of cutthroat kind of Wolf of Wall Street reputation of FTX and Alameda as just like being like, well, he's an SOB, but they're the best out there. And turns out them and a lot of others like Three Arrows Capital that had similar reputations in the industry were proven to be like complete idiots when the whole thing came crashing after rates were increased. And like kind of to your point earlier, like, oh wait a minute, like nobody here knows what's going on.
Right. I think in general, like people really, really underestimate sometimes how actually really stupid the people at the top are. I think is kind of the thing that I'm always like coming back to.
In this case, I definitely think, like, it seems to me like at the end of the day that initially they got wrecked from being hubristic and way risk taking. Then they started doing a series of kind of like probably like self-justified things that were essentially crimes to kind of like cover that up. And whether that's a combination of hubris or amphetamine use or the access to the heights of power that they had that kind of made them think that they could sort of like have the perfect plan and make it all back in the next bull run or whatever. So it's to me it smells like crime, but not kind of like a grand conspiracy and a great narrative crime. It's an incredible story, an incredible blow up, but like I said earlier, it's sort of like a very literal, stupid, on its face thing that is maybe the kind of crisis that we're going to be getting from here on out.
Hey everyone, if you're enjoying this episode so far, be sure to subscribe, leave a review, share with a friend, and join the crypto leftist communities on Discord or Reddit, which you can find links to in the show notes. If you're enjoying the interview or find the content I make important, you can pitch into my efforts starting at $3 a month on patreon.com/theblockchainsocialist, which really helps since making this stuff isn't free in terms of money or time. As a patron, you'll get a shout out on an episode like I just did and access to bonus content like Q&A episodes where you can submit and vote on questions you'd like me to answer, and I'll give my thoughts in roughly 20 minutes. You may also get bonus content like what I recently did by releasing the full interview that I had with Vitalik Buterin a week early before anyone else. Of course, I'll still be making free content like this interview to help spread the message that blockchain doesn't need to be used to further entrench capitalist exploitation if we put our efforts into it, so if that message resonates with you, I hope you'll consider helping out. To continue, maybe just to finish up very quickly, CZ basically sold a bunch of FTT tokens, and I think it led to this idea that everyone was already sort of on edge because of all the other different bankruptcies that were happening. And so people were wondering about the solvency of FTX and Alameda. And so eventually, there was all of these like crazy tweets from SBF saying like, don't worry, everything is fine. We have more than enough to cover withdrawals, which is always the thing that every CEO says right before their company goes bankrupt, I think. And so now at that point, he had like asked Binance to give them or for Binance, I think to buy them. But that didn't go through. Binance said that the hole was too big, even though they had first said that they might do it. And so now we're at a point where he had to declare bankruptcy, and he was sort of holed up in his penthouse in the Bahamas for a little bit, where he was continuously having other very strange tweets, including the "What Happened" tweet, where he tweeted one letter at a time in like various different things, and then just a weird kind of like rambling of what he's trying to do. And now he's been recently going on these different interviews, and everyone's kind of wondering like, why the hell isn't this guy in jail? Why hasn't he been arrested yet? And, it feeds very well into this sort of conspiracy theory that people have been proposing that largely comes from like a pretty right-wing view most of the time, that, he has sort of been in this kind of cabal of different elites with Gary, in cahoots with Gary Gensler, and like these various other actors that are at the top of the Democratic Party. You know, he also had, you know, Bill Clinton and Tony Blair at like this big FTX conference before. So there's a lot of different like little tidbits about him that when you like search into it, it's like it like it's easy to kind of like continue going towards that conspiratorial path. But I think a more reasonable thing to sort of get from all this is that he was just playing the game in a way that was like to his own benefit. It wasn't like he used clearly the effective altruism thing to sort of justify a lot of the things in order to like give legitimacy to FTX. He was definitely like saying all the right things that he could say in order to get the right type of press and the right type of treatment from different regulatory authorities.
Yeah, I think it's like I think that the story to me definitely feels like a society and a point in time where there is, there seems to be a lack of regulation around centralized crypto custodians that obviously needs to be fixed immediately. And I think that is something that I think a lot of the crypto kind of industry is on board with. And I think that it sort of becomes a bit of like the industry is trying to kind of make a distinction between decentralized and centralized, and DeFi and CeFi. And I think that there definitely is a sense in which, without, with some regulatory clarity in the United States, some of what happened over the last year may not have happened. There's reasons, why FTX went overseas and was able to kind of both create this contraption of FTT and skirt certain kind of like derivatives laws by offering trading offshore, as well as just kind of like almost a combination of like unclear regulations and then obviously under regulating, like where is the kind of Glass-Steagall for crypto. But yeah, I think it's very clear that it is like to me a system failure, like a product of the system, like as it currently stands, in ways that maybe also reflect other industries and other types of similar corruption. The sort of personalized conspiracy narrative that often happens in our I think the problem sometimes the problem with that is there are real conspiracies in the world, but oftentimes and most of the time it's not as exciting as that.
Right. Yeah, I think yeah, you have where people say that anti-Semitism is the fool, or anti-Semitism is a socialism for the fools, or something like that. Or it's like very easy to fall into these kind of weird traps if you are not like more engaged and more educated about these things. And I think the thing from FTX, I think there's so many other, like, as if it is only a crypto thing, which is kind of like also a kind of annoying response that I've seen. It's sort of like, you have, of course, besides FTX, you've had other crypto stuff like Mt. Gox, like BitConnect, like OneCoin. But then you also have like, you had Enron, you had the Bernie Madoff stuff, you had Lehman Brothers, you've had Stanford. So a lot of these things, to me, it feels more like an issue of capitalism, of financial capitalism, and sort of like the system's inability to regulate itself in a way that is like able to fulfill the needs of people.
Yeah, it sort of just rewards narcissism. And I think what we're seeing here probably is just like a sort of a view of narcissism enabled and kind of at a big scale by, a society that is, that's what's rewarded.
Yeah. And so I think what it also shows as well is that like the US doesn't have two different parties in reality in a lot of ways. If you look at kind of how he was playing the system, in which he's been very open and very honest about, is that like both Democrats and Republicans have been on the side of FTX in different ways, due to probably a lot of the donations that they've received. And so like both of these parties are the party of capital. Like I think Sam Bankman-Fried is just kind of like the weird, awkward, like sociopathic but earnest embodiment of capital in a way that just like extremely weird, but is just what is the part of the very literalness of our times, I think, that we live in.
Absolutely.
And so with all of this kind of happening, I guess for you, I'm curious, I guess what are the next steps? What should happen next? Because I can see a lot of people thinking about or talking about that, with all this contagion, it sort of proves a lot of the critics correct, that crypto is all sort of just like this speculative casino, that it's all going to it's only going to hurt people, and therefore, it should be ignored, or it should be made illegal or banned or whatever. But I think if you want to talk a little bit about, and you talked about it a little bit before, but like kind of like the distinction between what FTX is doing and maybe what DeFi is, and what it's the pros and cons of that.
Yeah, I think so. The fact that FTX was kind of a custodian, a centralized entity that had all this control, in a lot of ways is like how it alienated itself from a lot of the crypto community. And the crypto community in a lot of ways has a deep skepticism of custody, although they have a weird like love-hate relationship with it, because we do see a lot of like the most hardcore self-custody Bitcoiners getting wrecked on FTX, or getting wrecked on what's the I can't even remember the most recent one, BlockFi. And so the centralized exchange has, up until this point in crypto, been kind of like a necessary evil to most of the people in the industry. Coinbase, for example, has spent a lot of time also trying to kind of straddle the line by, for example, investing in a non-custodial wallet of its own, Coinbase wallet, contributing to the development of the Ethereum ecosystem and key parts of upgrading and scaling the network. So the sort of debate and the spectrum of kind of centralized exchanges to decentralized applications and alternatives is kind of like a core existing fault line or existing kind of live wire in crypto. And like there's a spectrum of opinions about how centralized, moderately centralized versus fully centralized versus, different levels of centralization and decentralization. But I think in addition to kind of crypto skeptics overall having a lot of ammo to their arguments in the wake of FTX, I think we're going to see, the self-custody narrative from critics of these centralized entities also getting a lot of evidence. You can see lots of downloads of non-custodial wallets and purchases spiking of hardware wallets. So I think there's definitely going to be a refocusing in the crypto community on more decentralized versions of these things. Vitalik, for example, described a system in which an Ethereum rollup, which is basically an extension of Ethereum, could be used to implement an almost centralized exchange type experience, but in a way that they could never steal client funds. And these are the types of things that I see the kind of crypto community pushing. On the outside, I think it's kind of harder to predict what the true impact of this is going to be. I think there's a lot of issues in passing legislation. There was the bill that Sam was apparently pushing. I forget the exact name of it, but is being bandied about in Congress. And the main point that the community was most pissed at him about was the portion around regulating DeFi front end. So these decentralized lending protocols or decentralized exchange applications, they exist permanently on the Ethereum blockchain, but you still need to access them through a web browser, for example, and an application. And those front end applications, regulating those the same as custodians and putting up kind of like almost like a regulatory barrier to a decentralized competitor to a centralized exchange was kind of a sleight of hand that I think we can safely say Sam was trying to kind of, like the crypto community kind of caught him out in the middle of like trying to do this behind closed doors. And that part of that quote unquote conspiracy, I think is true. Like he's looking for, but it's not like this grand thing. It's regulatory capture. He wants to just make it harder for different decentralized exchanges to compete with a centralized exchange like FTX. So I think that one of the big questions is going to be whether we see kind of like the DeFi regulation that includes essentially like glomming together centralized exchanges, for example, and decentralized applications under the same regulatory scheme, or whether crypto community, with all of its burned political capital, is able to kind of convince the Hill to thread that needle of cracking down on the centralized lenders and entities, but leaving things like front ends for DeFi applications or decentralized exchanges relatively untouched, except for probably things like OFAC sanctions and those types of things.
Yeah. Yeah, I think it has been interesting to see this type of thing develop. I think, yeah, in some ways, so you had this the story is even crazier if you think about it. What was happening just like the month before with SBF? Like he had, for example, he was on a debate with Eric Voorhees on Bankless, kind of like a bit before all this stuff was happening, where they were arguing about the legislation that he was proposing. And I think to a lot of people, SBF just looked like he was completely unprepared for that debate and that discussion. And I don't want to, I disagree heavily with a lot of things that Eric Voorhees says, but he did appear much more prepared in that discussion. But he also said in, I think, a later interview about how DeFi systematically prevents a lot of basically everything that happened with FTX. I don't necessarily agree completely that it prevents everything, but it does prevent some things probably, which is kind of true. Which is I think just as a way to show the difference between using a decentralized application on decentralized infrastructure versus a centralized choke point on decentralized infrastructure.
Yeah, I think that probably a good outcome for the industry and society is a combination of a shift to decentralized, and not just decentralized, but provable. So Vitalik in that same blog post talked about various cryptographic proof of reserve systems and potentially even proof of liability systems, where the solvency of kind of the centralized financial system even can be sort of provable in some ways. There are a lot of issues with that, and it is quite a big undertaking. So that's kind of one area where this could potentially improve. Another is obviously regulation of if you are custodying customer funds, and I think there probably are fraud laws that already cover what happened with FTX, and I'm pretty confident they're going to be able to prosecute those. But nevertheless, there may be more proactive consumer protection laws, if you're custodying funds. There's going to be, I think, heavier regulation there, and there should be. And then, I think the sort of the shift to DeFi, some of these scaling technologies that we alluded to, making these decentralized or trustless versions of these exchanges, where it can trade or as fast or as cheaply as an FTX, but in a way that can't be rugged, so to speak. I think that's also going to proliferate. It's not a silver bullet. It also doesn't solve problems like pump and dump schemes and the kind of influencer network of pay for promotion and smart contract bugs and risk is always involved in a lot of these undertakings. So as always, nothing is perfect, but we may hopefully for the industry that over the long run, if you're someone who is a believer in crypto, believer in this stuff, or think it at least could be something that is maybe more net good than not. That this is probably as much as people have completely gotten hurt by this, and it's probably going to help the industry get out of its sort of immature phase, or it will just kind of collapse, which I think is the ultimate fate for crypto if it doesn't start focusing much more on non-speculative, non-financial even use cases that actually kind of are useful. So
from there, I really want to talk a bit about this publication that you, or this article that you published on your Mirror. So I think if I could, I want to give a quote just from the first paragraph. I thought it was pretty good. So the Mirror blog article, for people if they want to look it up, is called Superstructure. But you said in the first paragraph, the speculative use cases had already completely run out of steam in terms of bringing in some quasi-normies on the margins, even before SBF Leroy Jenkins the crypto space. There are basically no newbies coming into crypto, and most of the ones who had gotten in during this last cycle are sitting crypto out completely now because they've lost so much money. This current blow up is certain to complicate the regulatory and public relations picture for crypto, but I submit that crypto was already facing a do or die proposition: create value outside of speculation for the general public and economy, or likely shrink or collapse over the medium term as there is less and less to potentially even speculate on. So yeah, I think what is interesting, what is happening like right now, I think is sort of like a lot of people realizing that. It's something that I think, I mean, I've been saying for quite a bit of time, but yeah, I mean, there needs to be a non-speculative reason for people to use cryptocurrency if people want it to continue to exist. But yeah, do you want to maybe talk a little bit about that and what your thoughts are on some of the things that should be done right now?
Yeah, I mean, I think it was already kind of dead. Like, what is dead may never die, almost. Like when this happened, I think a lot of people in the industry were like, this was almost like the seventh or eighth existential crisis that has befallen crypto over the last year. And as the industry has like essentially stopped growing, in terms of new people coming in to gamble, I think it is dawning on a lot of people in the space that, hey, like this space has actually been around for a while. New technologies do take much longer than people think to actually be diffused and built out, and like the impact of the internet really on society did not happen until, I don't know, 20 years after it kind of like first was even commercialized. So these things do take time. But I think in general, crypto has been given a lot of time by society and does run the risk of this sort of like cost benefit thing being irreparably, imbalanced in the public's eye by, all of the kind of excesses and all of the kind of, speculative froth, and that this technology kind of uniquely enables. So it's almost like speculation squared. Every new technology like railroads, et cetera, was characterized by these speculative bubbles and manias. But there's this like self-referential loop of that because these things were themselves financialized that has really, I think, like, sucked up a lot of attention and brain power in the space towards more speculative and more, reinventing different ways to trade and reinventing different, types of complicated financial instruments to kind of speculate and gamble on. And so I think that ultimately that had already sort of petered out with the market crash, and that sort of use case will always be there for crypto, I think. But my point was almost that unless the real sort of crypto economy, if you will, in a similar way that like you could not have an only financialized economy. UK is figuring that out, for example, with its relationship to the city of London. So I think a very similar thing applies to crypto, which is like if crypto is not expanding, we have all this secure block space, so to speak, now, and I basically think that the crypto industry's technical challenges are, for the most part, engineering and not research, and they're kind of just like finishing implementing a lot of things like roll-ups and data sharding and data availability sampling and lots of interesting cryptography that basically removes all the excuses for adoption. At the end of the day, like this is going to be easy to use, this is going to be super fast and cheap and secure, and we're going to have all the kind of cakes and eating them too. But what is it all for? I think is the real fundamental crisis facing crypto. That was already the crisis facing crypto before FTX. In this kind of like downturn. And, I don't really see how that does anything other than perhaps accelerate that realization by the industry and, kind of rip the Band-Aid off to some extent. But yeah, I think that the industry is going to live or die, whether, based on things like, are there viable decentralized marketplaces and applications and social networking sites and uses for this, net new things unlocked for financial applications, for services that were maybe once mostly for rich people or for developed market participants. And so I think a focus on these things is really going to be the only thing that is fundamentally growing that GDP of crypto, which simple kind of like mental arithmetic says that if the GDP of the industry that we're talking about here is like shrinking or not growing, then like what is the financialized portion even rehypothecating?
Yeah, there's something to say about the fact that a lot of the like the finance in crypto world is a purely financial finance, I guess, versus the normal economy where a lot of finance is backed by like real goods, real consumer goods. And at the moment, crypto is not really at that point for the most part, besides kind of more speculative things, in which case it may be good for the very short term for a team to make a little bit of money to maybe fund their project, but it's not like a long-term solution at all.
Yeah, I think that some of those like real economy things like that will I think the tech is there. Like it's possible to do these things, and really we're going to see whether things like decentralization, censorship resistance, composability, uh, if if these things are actually like enabling new things to happen or not, enabling things that maybe required trusted relationships before, or unlocking inefficiencies, or allowing new types of coordination not possible without these technologies. And I think that really that's going to be the judge of it is whether this is really uniquely suited for it. And when all the kind of speculative froth drains out of something like that, it kind of does focus the mind, of an industry like this to come up with some of those things. So I do think that we're going to see some of those green shoots actually start to bear fruit, in the next few years.
Yeah, it's interesting that like when I spoke to Vitalik in my interview, I confirmed with him like the kind of a big reason behind this idea about soulbound tokens, whether or not you like it or not, that idea, but it came from a place of basically needing to create non speculative use cases for crypto that are useful in particular ways. And so I think like there is like I think a lot of people at the top, I guess, of crypto world like know that, and at the same time, I'm wondering if those people will be able to pull it off or not. I think that's of course one question, but one thing that I've sort of, and maybe this is like a horrible kind of analogy to or like completely not relevant, but I kind of feel that this kind of makes me think of like the Depression or like the Great Depression, or like any type, there's like this big market crash. Like generally afterwards, there is the rise of, I mean, kind of both fascism, but also a rise in like social democracy. Like social democracy only came out of really like after like extreme sort of market distress, I guess. That was whenever like these types of very basic like labor rights or things like that were kind of like really solidified or institutionalized. And I think that crypto kind of needs that moment. It kind of needs its like social democratic moment at the very least in order to be able to continue.
I think that I definitely see like one possible way that could end up happening is you do have like it's kind of back to our discussion around like the ability to act and the ability to take action that this sort of stuff does give certain people, particularly engineers and developers and things like that. I think that you will find like a lot of people who are like whatever, like retired already, or where money is not an issue, and they're these extremely elite, but also kind of work. A lot of them are working on foundations or working on protocols for free, or like building stuff and deploying it themselves, and kind of very quickly self-organizing to do something. And a lot of those times, the things that they decide to build is another way to trade and make money, but not all the time. And I think that the fact that they can, just kind of go ahead and deploy it and see if it works, and the kind of autonomy that does give a certain few privileged individuals who are maybe some percentage of them are very disillusioned by what happened, because even they are true believers. Maybe they're kind of a libertarian, and they're sort of like having kind of a reckoning of maybe we do need some regulation of like these centralized entities and whatnot. But also maybe that kind of inspires some of those people to be like, what are we doing here if we're not doing something that is like impacting the real world, instead of just kind of repeating this cycle over and over again.
I mean, what is kind of frustrating for me, I guess, is that libertarians will kind of hyper focus on SBF's, like the fact that he was speaking to government officials as like a way to back up their ideology, that this is sort of like, clearly this was the state's fault. Whenever the truth is that like FTX and all these other entities are like heavily unregulated. They were not regulated. Like they were in the perfect like type of schema that libertarians want. And it created this huge issue, you know, it created all this amount of contagion. And the contagion is because of like sort of like this like capital kind of like, I don't say incest, but like, you know, kind of creating these different interdependent relationships of capital, I guess, in which, you know, when one fails, it all fails. And, you know, these different backstops in the traditional economy, so to speak, although a lot of it is really shit and it does like the bare minimum, but it does the bare minimum because the only thing that it cares about is just upkeeping capitalism itself. Like, and, you know, there's a chance that all of this contagion is so bad that it can't even, you know, help crypto continue.
Yeah. Well, one thing I might critique from you know, like from that perspective would be like the idea of in Vitalik's post on like trying to kind of work out a way to disaggregate like particularly the proof of liability side of things, and to your point about like the, you know, like this is a function, you know, there's many ways to tell the story, but like one of them is like this is what like shell companies and complicated corporate structures and lack of corporate oversight and laws, or you know, like and but also these are like just like and you know, endemic to concentrations of capital. This is how capital essentially behaves. It conglomerates, it gets into bed with each other, you know, literally and figuratively, and makes the,
It's a polycule of capital.
you know, keeping track of everything that's going on. You know, watching kind of Vitalik try to figure it all out, I'm like, well, there's only so much that we're going to be able to do in this mode of production to kind of roll back the impact of concentrations of capital and like what concentrations of capital decide to do behind closed doors, and you know, that can buy, you know, like entities buying each other and controlling secretly, like that's all like that's got nothing to do with crypto. That's all just like, you know, shell companies, and that's how the game is played.
On one side, like someone may say, well, then that's endemic also to crypto, but I think it's more endemic to the way that people think about crypto than necessarily crypto itself, because you still have at least a couple examples like the DAO hack, and like, I don't know if you know much about the situation that happened on the Juno network like a few months ago. But like there are times whenever people overcome the logic of capital, you know, where they like decide, no, we don't want to follow that logic and we decide something else. And there are like these little moments where that happens, like with the DAO hack, where they completely reversed kind of what happened out of that situation. And same with the thing that happened in Juno. So like I think there is still like this possibility of not falling into that trap.
I think there's a great example. Another example of that I would say is there was a big debate over MEV. I think you may have done an episode on MEV, maximum extractable value, which is kind of like this value captured by various privileged positions within blockchains that various actors can have. And I think there was a moment where like there was a potential version of the Ethereum client that not only like helped miners at that time extract MEV, kind of simple MEV or like single block MEV, but also there was kind of like this multi-block MEV or kind of reorg attack, where the chain's integrity and consensus was like fundamentally just going to be destabilized, which actually would have been like very profitable for all the different entities, and it would have kind of created like almost like a collapse of like a tragedy, the commons collapse of essentially like an unusable network, an untrustworthy network that destroyed the value of the tokens that the MEV was going to be denominated in. So there are these moments where the industry basically, like the individuals involved, kind of like, we're essentially convinced not to build this thing. That's basically what's stopping this piece of software from theoretically existing and wrecking the Ethereum consensus. So I think there's numerous examples of like the industry is not fully acting, or participants are not acting in, you know, necessarily strict self-interest. Maybe it's enlightened self-interest sometimes, and then oftentimes I do see even, you know, completely altruistic and you know, kind of, you know, ideological or whatever initiatives or things that happen, which, you know, cannot be simply explained by just the logic of capital.
Right. And I think it's, you know, perhaps our job to kind of identify those moments and kind of like make those moments happen more. Kind of how I see it.
Yeah, definitely.
So we're coming probably around probably the end of the interview. I was wondering if there are any sort of like last words that you have for people.
I mean, I think to two different groups, I guess, like to the left people listening who are kind of skeptical about this technology, and I think the skepticism is definitely warranted. I guess I would just encourage you to take a kind of like a materialist approach and actually engage with what is actually going on, and also just have like a realistic approach. And this stuff is actually most likely going to proliferate and potentially change a lot of how we do things, but also maybe things are going to stay the same, but will be a little bit different. For example, stocks and bonds being put on chain and whatnot. So, regardless of kind of the ideological questions and malleability of it, I think it's important to understand it and not kind of put heads in sand and whatever, and just keep an open mind to again with all the kind of caveats and cynicism to potentially things that could be done with it or impacts that it could have. And then I guess the crypto people, I would say, yeah, there is definitely like uh, a need to look at what's happened over the last year, kind of without an ideological lens, and just kind of try to take a bit of an objective view on what happened, and you may have conclusions that are uncomfortable, like hey, wait a minute, like maybe the state should regulate certain types of intermediated and custodial transactions and commercial relationships and protect consumers. And like there may be needs for certain things that are ideologically not aligned with, let's say, a libertarian philosophy, but which let's say preserve decentralization and certain rights of kind of coda's speech and ability for kind of sovereign people to sort of self-organize and do what they want to do online. I think that's something that I think is important. I think it's something that is going to have to be, let's just be realistic and be, I guess, objective about what happened and self-critical as an industry. Otherwise, if we're just going to look at it as like a conspiracy of the Democrats or a conspiracy of Sam Bankman-Fried or whatever conspiracy of Gary Gensler, that's a surefire way for this industry to basically like not find its way out of this crisis of confidence. And so I think, just like take it seriously and take it to heart.
Thanks so much for coming on and for talking about this with me. Maybe just a last thing, if you want to leave people your plugs, where can people follow you? And
yeah, thanks, man. You can follow me on Twitter at Beige42, and that's been great. Thanks.
Cool. Yeah, and check out his blog on Mirror. It's called Superstructure. I think I think that's linked on your Twitter profile as well. But I'll put a link in the description.